Julia, just get your thoughts on the session today.
James, usually a Monday session is a pretty sleepy session, but that certainly wasn't the case today. In fact, we saw some strong volumes coming through the market with more than $4 billion worth of stock being traded, and that points to international participation. Now, we have seen the Aussie dollar strengthen a little bit over the weekend, despite those soft numbers that did come out of China. In fact, exports were down by 8.3%, but of course that only stirred on belief that we'll continue to see support coming through from the People's Bank of China. And of course, with the Shanghai Composite up around about 4% today, that lending support to the market as well. But after 3 consecutive days of losses, you know, it's nice to come back on a Monday with the market up higher and with the banks helping to support the market as well.
Just on the banks, Julie, do you expect the support to continue? Obviously the big one being CBA later this week on Wednesday.
I think there was a sense of relief today given that we did see NAB's result, especially given some of the news that we saw out of ANZ last week. And if we have a look at ANZ's quarterly profit numbers last week, we only saw growth of 3.6% on the cash side. If we have a look at NAB's result, quarterly cash profit was actually up by 9%, so I think a bit of relief there. But of course, the big test is going to come when Commonwealth Bank reports on Wednesday. We know that Commonwealth Bank needs to raise around about $9 to $10 billion worth of capital by the 1st of July next year. The big question is whether they are going to do it in one big hit, as we saw from ANZ. And I guess if we do see that discounted capital raising, we could see some more weakness coming through on the banks. But the way the banks did come back today suggested that the market's starting to slowly discount the possibility that we won't see that capital raising route being taken by Commonwealth Bank. So it is going to be a massive week for the banks. We've seen NAB and Bendigo and Adelaide Bank coming out today. Bendigo and Adelaide surprisingly not having a good day despite full year cash profit up 13%, double-digit growth there, and we've seen the shares lower on the day, and that's really because of the quality of the result. If we look at housing, only up by 3.6%. That's less than 0.5% of system growth at 7.9%. And deposits weren't even growing. We saw deposit growth of just 2% compared to system growth of 6.7%. So while cash profit was up higher, unfortunately, if we drill down into the numbers, things not looking that healthy at Bendigo and Adelaide.
Yeah, just tempted to pick up a bit of Ansell stock today?
No, it wasn't. I mean, if we have a look at Ansell, it was the worst performing in the large cap space. If we have a look at JB Hi-Fi, it was the best performing stock in the large cap space. And both of these stories to me were a momentum story. In one company, we saw a decline in momentum in terms of the underlying business. And in the other, we saw a real ramp up and a turnaround in momentum. With Ansell, it's a story of declining momentum. I mean, organic growth was just 0.6%. That's less than 1%. So really the growth that we've seen in the report this year has come from the acquisition side of things. In fact, momentum decreased even further in the second half. If we have a look at North America, which is the largest market for Ansell, we actually saw negative 1% organic growth in that second half. So yes, currency is important because the US dollar specifically, 51% of revenue for Ansell, and that's why it reports in US dollars rather than Australian dollars, which is only 5% of revenue. However, if we have a look at the underlying business and the organic growth happening, it's extremely soft. Unlike JB Hi-Fi, where we are seeing a ramp up in momentum. If we have a look at comparable sales, 2.9%, but in the second half, that was a massive 7.4%. And in the July update, like-for-like sales up by 5.5%. That's compared to the same time last year, where it was actually negative 5.5%. So momentum ramping up in terms of JB Hi-Fi, and a bit of short covering happening there. But with Ansell, the opposite happening, when momentum is really starting to dissipate there.